So hi everyone, my name is Halima Murunga. I'm a digital payment specialist. I've been in this space for over 15 years, working on digital payment systems for water utilities. I've done that across multiple markets in Africa. Also worked with the World Bank and the UN, advising on how governments can adopt digital payments as a strategy. So this was convincing governments to move towards the adoption of mobile money, and also worked with startups in the US. So this was on cards, remittance, and also on crypto. And now I go around helping Web3 founders, crypto, stablecoin founders to understand why it's important to have compliance as part of your infrastructure. So we're going to have a session today, and I want you to take you through the process of how different people would perceive your product. So from a bank's perspective, from a regulator's perspective, how would they classify the product that you have? I want you to understand how bad actors can try and attack your platform, so you know how to be prepared, and also give you case studies of what other companies have gone through. And we'll have a lot of fun sessions now with group work, so you can go through what it actually means to understand what fraud and money laundering means for your platforms. So if you have any question whatsoever, please ask. I'm here to help. So we'll start with a session on understanding. So I'm going to give you an example of a company. It's a synthetic company called Chainbridge. Don't mind the name, I know it's not fancy. How many of us here are building platforms, Web3 based, wallets? Put your hands up. Also, it's not many of you, but how many of you have the desire to build?
Strictly wallets for building.
Anything that touches money. Anybody's processing money. Yeah, anybody's touching money, processing any kind of payment. So there are more of you. Okay. So pass this to the other group. So here we have Chainbridge. So it's a USDC-backed remittance company. So it's doing cross-border payments. Typically what they do is you have the ability to have on-chain for USDC. You can convert the currency into Kenya shillings. The ability to have M-Pesa payouts on mobile money. You have pooled float, which means before you disperse funds, you will hold on to customer funds. And you need to be able to know that everybody in this room is my customer. The money has been pulled together. And I know your name is? Donald has $50 on my wallet. The lady next, what's your name? Barbara has $20 on my wallet, and all of that money has been pulled into one account. And I know this is how much each person has. And you can be able to pull your money out for M-Pesa. And obviously the beauty about Web3 is the promise of instant payouts. Are we together here? Okay. So typically the business license, this entity has no business license. The founders see themselves as a technology layer, not a PSP. Does anyone know what a PSP is? Correct. Can you give me an example of a PSP? Pretium. Okay. So this entity is, in the view, they're only the technology layer. Then processing transactional volume every day per user across 7 accounts. You're seeing volume of $180 to $220 in 14 consecutive days. So in 2 weeks, you're seeing this kind of volume per day, per user per day. They've never had any instances of money laundering, so nothing has been filed. There's no personnel in the business that has the ability to do compliance checks. And also, there's no suspicious activity that's ever been reported. And the destination, which is where the money is going. So out of this transaction volume, 200 plus M-Pesa recipients, and all the money is going into one geographical area in Kisumu. And there's no stated relationship of how this money is moving. And we're going to go through an exercise of, and from an institution perspective, how would you interpret this scenario? So each group, who wants to be, so we have 4 options: the founder, the AML, anti-money laundering system, we have the central bank, and the bank. Who wants to be the founder group for the founder? Should I just randomly assign? Huh? Chris, your group? So AML stands for anti-money laundering. So let me give you an example of money laundering. You hear this a lot. A politician has been found with cash in their homes, either locked up in a safe or under a mattress. So this is funds that have been illegally ill-gotten funds. Now, the biggest challenge for people is, how do I clean this money through the banking system so it comes out as clean so I can use it to spend at different points? So how do I do that? I can go to an M-Pesa agent and put money into my M-Pesa account and make sure that it's small amounts, let's say 5,000 shillings. But 5,000 shillings it's very little, right? And if let's say I've stolen $1 million, the M-Pesa 5,000 is minimal. That's how many dollars? I have a long way to go. So even if I was to recruit everyone in this room to go do the same M-Pesa transaction, and you put 5,000 today, the next day you put another 5,000. Yeah. So let's say I want to put it on a crypto platform. So I open an account, I load my wallet, and I withdraw the money either through M-Pesa or any other cash out option that's available on the platform. I've cleaned that money. So now I can use it. So that is what we call money laundering. Yeah. So we're going to go through an exercise of how people will try and, so first is to understand how the different entities look at how we've built our companies. Yeah. Then the next exercise will go down into how people actually clean money through a platform. Okay. So you have the founder who wants to be the AML system. So you hand out those cards to your Who wants to be the Central Bank of Kenya? But you guys are the founders. You can't be two. Or you want to be the central bank. So it's one persona per group. So unless this group takes the founder, then this group takes the, yeah, and then you guys will be the bank. So on your cards, I'll give you 5 minutes. It gives you the description, and I want you to discuss amongst yourselves the questions on the card, looking at this scenario here, what we've painted of Chainbridge and the business and the transaction flow of what you're seeing as this transaction volume. You're seeing the destination pattern. You're seeing this is the resources and how the business has been defined.
So using one business.
This is what you're analyzing, this business, but you've been given different personas. So you have the founder, you have the central bank, you have the bank itself. You have the bank itself, and you have the AML system. So discuss amongst yourselves for 5 minutes the questions that are being asked on the... Just focus it on me, yeah. And I think one sheet should talk about smurfing. Just a quick one. I think there's one sheet that talks about smurfing. Smurfing is what I described of breaking down, trying to launder money through a platform using very small amounts. So we'll start with Group A that was doing the founder. Which group is that? Okay. So, Group A, how did you define this company?
Okay, so according to us, Chainbridge is going to be like an orchestrator that is going to connect the PSP and the user.
PSP and the user?
Yes.
Okay. So you're an orchestrator?
Yes, an orchestrator.
All right. Group B, bank.
I would require KRA documentation PIN, proper business license,
yeah,
and maybe national identification. Those three documents.
Those three documents. And if you have an anti-money laundering team, what transaction pattern would you be looking for from what you've seen from the transactions here?
Maybe if there are huge amounts flowing into the business or an inflow of money, like going and it's out from suspicious sources, like maybe an account is flagged, and then there's money flowing into this business's account, such patterns.
Okay. And so you've raised something very interesting about a suspicious account. Who would you flag now as so UBO stands for Unique Beneficial Owners. So these are the actual owners of the directors of the business, the shareholders of the business. And how would you state that, like, what is their source of funds? So if I am politician A and I am the actual person behind this business and I have $1 million and I need to clean it, and you find out that I'm actually one of the owners of the business and my source of funds is illegitimate, These are the things that you're looking for as a bank. And you've rightfully stated, like, when would you now escalate to the central bank team?
One, if they don't provide the compliance documents, the one I stated. Second, if the documentation is not proper, like they can submit documents, but they are not legitimate or they're just forged documents. And also, like I said, if there are suspicious accounts involved in the business.
So at the moment, this business doesn't even have a business license.
Okay.
So things to flag. Next group, CBK. How did you classify this business? So, for example, what licenses does the entity require for conversion?
So for the FX, we looked at the code. Primarily, there's a set CBK code that they have to comply with for FX exchange.
Yeah.
But again, looking at virtual assets in play, we place them as virtual assets processors, meaning they did a license under the VASP. Then now when we trickle down to how they're moving their money, now all the other mandates and the licenses that are required, from tax to this other one, AML as well, data protection as well, POCALMA as well. Yes, so they have to be compliant with all the other ones that are stated. But at the genesis, I think the only new license they would need would be a VASP license for them to operate.
Okay.
What does orchestrator mean? Is it just the technology? Is that just the code that's running at the PSP, or
So at no point are you going to handle the user's assets or the fiat. So if we are okay, so as the orchestrator, in simple terms, you are just going to act as the bridge. We are going to provide the technology that will connect the PSP and the user who has the stablecoins.
So PSP off-chain,
Off-chain. So like the PSP will be off-chain. So as to just provide the technology, the way Apple Pay just provide the technology for you to use your debit card or your credit card without you having to, like, without them having to store your funds.
So what is the interface between the PSP and the provisioning on your end for the funds to find the way of chain? What does that?
Okay, the flow. Okay, so the user has the stablecoins. So the user will deposit the stablecoins into our smart contracts, and then they're going to forward the stablecoins to the PSP with the user's bank information or their mobile money number. So after the PSP receives the stablecoins, now they'll send an equivalent of the stablecoin in fiat to the user. So now to us, we just provide the technology to connect the two. Yes.
I think maybe just to add on that is that, for example, the way Minisend works is that we don't really store any users' funds. And what happens is the moment USDC lands on a user's wallet, of course, they'll get a notification that you've sent this amount of USDC to your wallet, right? And then from there, they begin making an initiation. So they initiate a transaction, I mean. And what happens is, of course, they'll quote their name, their phone number, maybe their bank details. And then whatever they have in their wallet, that is what we route to the PSP side. So it's more of like sending a quote to Don, that hi Don, have this amount of USDC, like say 20 USDC, and I need the equivalent in fiat. So we just send a quote to the PSP and they release the equivalent of that to the users, either mobile money, M-Pesa, or bank account. So that's how it works.
So from the block, that's kind of just the first block. It's not catering for guessing. I guess for this example, that's just the first block in this warehouse.
Yeah, exactly. How the flow is from a B2C side.
Yes.
The easiest way to understand the flow of it is segmenting based on interaction. Let's say from the USDC to case. No, that requires a different regulation bit of it. Then when it comes from case to the payouts, case to payouts, no, that's more of like Safaricom, maybe the banks at this point. Then the pooled float. No, I feel this is where we have the main question, because we don't, as the founders, they don't hold the finances. It is the clientele who holds the finances. For them, they're just providing the infrastructure for settlement. So segmenting each sector based on interaction can be a starting point to understand what mandate or what licenses are required at each particular step. And also, like the pooled float, it's more of understanding the infrastructure that comes into place, because we can't treat this as the ordinary PSP, because it has introduced a new aspect whereby the clientele themselves, the C client is the one who holds their finances. For them, they're just seeking an infrastructure. But what we already have in the market is that the bank or the already existing PSPs, they hold a certain float for them to disburse to us when we request.
So this is good, because that's why you need the bank.
Yes.
The bank holds the full float, and it's held by a custodial account. What did the bank say? This is a high risk account because there's no documentation. It's unclear about who this business is, and in addition, when you do not have a structure, how FX is being changed, how pool floats need to be assigned separate from your operating accounts, you're also putting the bank under correspondent risk, because you're using their license to operate. And a bank is never going to want to sever their correspondent risk for the sake of this relationship. So they would take very drastic actions and classify this as a high-risk account. So they would either take, from your perspective, you want to protect your license. So they would shut down your operations because, one, it's not making sense about how money is moving and who takes the liability. And typically what the regulator will do is they'll bundle everybody together, including the person purporting to be the technology layer. It's called Know Your Customer's Customer. So it comes after everybody because it's unclear about who is the customer here, whose platform are they on, and so who's owning this relationship. And if it's that gray, bundle everybody together, and that now turns into a case. But you need to understand how each of these people have different views about how this business has been defined. So next is the AML system.
Okay, yes. We're the AML system. So the first question, which smurfing structure does this pattern match? So we talked about account clustering, I believe it's called, because the case study mentioned that there were multiple. So the definition we found online was, just leave it. Account clustering. So multiple accounts, often owned by different individuals but tied to the same ultimate beneficiary owner, receiving rapid deposits. So we talked. Okay. We talked about. Okay, sorry. We talked about 200 plus unique mobile numbers. The amounts are $180 to $220 a day, 7 accounts, and 14 days. So with that, it matched that specific description.
So already we're seeing patterns of money laundering going on. And you flagged that.
Yes.
The amounts are just below the threshold that you used to flag. Typically with a bank, the threshold is million shillings. So you find people doing transactions of 900,000 to stay below the threshold that will not flag the AML system. So what would your system need to see to not flag this as suspicious?
So what we talked about was the first thing that came up as very suspicious to us was the very small range, because when you're doing business, think of like Carrefour. Not everyone is good to have a bill of 10 to 12,000. Like that's just very rare. The people who will come and buy things worth 2,000, things worth 50,000. So that already was a very and then how rapid they were. It was a red flag to us. And so for it to be not as suspicious, the first thing would be to see a greater range. I would look more realistic in terms of like how a business functions. And then on top of that would also, although this specific case gave us only 14 days, we would have liked to see like a longer context. So if you have like we had mentioned it being payroll in the next question, if you have like a consistent 14-week payroll, if every week looks the same, that would make a bit more sense because it's more consistent. You could say, okay, fine, this is, we mentioned like potentially like contract workers who are being paid or, wages being paid every 2 weeks. That's quite normal. But the fact that it's just rapid 200 plus accounts, it did raise a lot of red flags. So those are the 2 points that we came up with on that question.
These are the things that we need to be aware of. As a founder, you're running a technology platform. To the central bank, there are 3 unlicensed activities that would warrant a cease and desist for that kind of exposure. There's an FX, you need an FX license. Either you've applied for it or you go and borrow somebody else's license. So sometimes you can work with the same bank, can offer you their FX license from their treasury department. Pooled float, if that's not clear, that's another issue for activity, and also for what you mentioned about VASP law. Then for the AML system, the structuring flag for the smurfing pattern, and for the bank, flagging this as a high-risk account. Any questions?
Not a question per se,
Yeah.
but more of like an add-on. Like when I was doing my research, I'm coming to discover that some of the requirements that are set up for PSPs and banks primarily also operate for VASPs.
Yes.
The only difference that comes in is the tech infrastructure. In this example, the pool fund was the main question, or was the novelty as to how the money moves. So having aligned based on what PSPs are complying with, and also banks positions as the VASP, the chain bridge company, to be compliant as a PSP, but now with add-ons that work as VASPs as well.
Yeah, so when and that's the challenge that's going to be as the VASP law comes into play. You're not only under the mandate of the VASP law because of the nature of how the money movement is structured.
Yeah.
You have to consider the fact that you're going to change. There's the FX issue, and then there is the issue of holding people's funds. That comes under the VASP law. And then there's the transmission of money when you want to push it out into an M-Pesa wallet or any other form of cash out options that are there. So you come under different laws start to apply to the business. And that's outside even of what is the VASP law, and that is the nature of payments. Any fintech, you have to take the time to understand how many licenses are going to apply to my business, and how do we start to embed that structure into how we build and design and operate the platform. Yeah. You'll all be compliance experts by the end of this session. So you flagged the right thing. So the transaction amounts are below a threshold. And it's 7 accounts that have the activity. So it means that statistically it's unlikely. So it means this could be something it's called smurfing. Then there's the geographic cluster. Why is the money all flowing into one direction in Kisumu? And then repeated destinations across accounts. So that's what you call layering. So this is someone trying to clean money through your platform. These are bad actors. And if any of you have the desire to build or are building Web3 stablecoin platforms, these are things that you need to consider. And this now, remember what I said, it goes to the product level, it goes to the architectural level of how you've designed your platform. So you have to look at how you're going to build this in when you're designing your platform to make sure you'll be able to flag these issues. Yeah. Mm-hmm.
So this compliance applies to Web3 or also the regular transactions?
Even on anything that touches money. So even within M-Pesa, they have a anti-money laundering team that sits and they look at all of these transactions. And if they notice such transactions, and let's say you're using their pay bill, do you know what they do? They shut down your pay bill.
So this is for in the case of Safaricom, it's for pay bills and tips only.
Yes, but you have to think about it like this. If you are running any sort of platform that touches money, whether you are a merchant where you're running e-commerce transactions, or you're building a Web3 platform, a fintech, you're processing payments, you have to think about compliance.
Thank you. Maybe I'm underage, so I'll be using their online, and I have a brother, so she sends money a lot, the same number, same location. How come her account is not closed? Is it because it's not a business, or there's no compliance when it comes to?
They do look at compliance, but also they look at the amounts. So when you see amounts that are very close to one another, that's where you start seeing that there's a pattern here that doesn't make sense. Yeah, so they look at the pattern. So maybe today she'll send you 1,000 shillings. Maybe in 3 weeks' time, she sends you 3,000 shillings. That's not suspicious activity. Because what a bad actor will do is they'll say, okay, we have a certain threshold we need to hit in terms of money that we need to move through your platform. They'll pick accounts and move the money through just below the threshold that it doesn't flag. But you'll see a consistency on a daily basis, or in a day you'll see maybe 3 transactions going through, and where that money is destined to.
Thank you.
do we differentiate between, I think you've also raised the same, a legitimate business, say an e-commerce store, and a suspicious activity, perhaps laundering cash? How do you differentiate that, considering the framework where you said these are amounts that are going through regularly? An e-commerce store could also be doing transactions like that. So what's the, how do you separate
So people
the
look
two?
at patterns.
Yeah.
So, for example, give me a commerce store that you typically go and purchase from.
Jumia.
Jumia.
Yeah.
How often do you use Jumia?
Let's say once a month when I have cash or something. Yeah.
Yeah. And what's the typical range of monies that you use to transact?
I'd say under $50. Yeah.
So that's the pattern. I can see that you would, once a month, be coming in, logging in, running your transactions. Also, there's patterns of where you will log in, maybe you leave things on your cart, come back, then you make a decision and say, okay, fine, I'm going to come and buy this in 2 weeks' time, and you make the purchase. So those are patterns that I'm able to tell that this is an actual customer. Typically, what happens when it comes to money launderers, they will log onto your platform, open new accounts, run all of these transactions through, make sure the money has exited and it's clean, and shut down those SIM cards end. So that's why SIM swap is such a popular thing. So they'll try and take your SIM card, run transactions, and then dump the SIM card. Yeah.
You mentioned about pattern. I'm asking, when you are discovering a pattern, is it more of an instinct, or is it a mathematical algorithm that can able to fish out the irregularity in the transaction?
It's mathematical. It's not
Instinct.
instinct. So all of these AML systems have algorithms that are implanted and rules. So the rule knows that if you see velocity on a transactions coming in with these particular patterns that have been identified, then you need to freeze this account. So there are workflows and rules that are built into the AML platform. So it's mathematical. The instinct comes in from the analysis layer. That's where you have a compliance person who will sit and now review the data to run the investigation, because a report has to be submitted to the bank to be told that this is what is happening, and also to the regulator.
Question. So in terms of, let's say you're offering a certain service, then it's subscription based. So every client is sending you a specific amount of money, and maybe even when you're cashing out a specific amount of money. How do you tally that from legit business and from money laundering?
So it's back again to patterns. So if it's a subscription business, you'll see that I've logged onto your platform, I've gone through KYC, and there's the monthly subscription towards your business. So what a money launderer look for is, how can I log onto your platform, put money on it, and remove money out of your platform so I can clean it. So probably what they would try to do is create synthetic IDs to create accounts on your platform. So that's the layer that you'd have to flag. Is this person real or not? So maybe they have robots to come and set up accounts on your platform, run transactions, but then they have to figure out how to remove money out of the platform. So you have to think about it from that component. And if it's removing money, it probably means that, which is the other layer about fraud, it's probably an internal person in the business that's allowing money to be withdrawn. Yeah. Okay. because a lot of fraud happens with staff members who have either access to the back-end system at a bank, for example, that would allow that transaction to happen and for the money to exit the system. Yeah.
So you mentioned about compliance, and I'm curious to know what's the aftermath after maybe for example you're investigating and you found someone has been siphoning money out. What are some penalties that someone could expect from this?
Let's go back here. Flutterwave had $55 million frozen. Binance, they had to pay that as an AML settlement. And you all remember a lot of their executives were arrested. And yeah, so it can be fines and also personal liability to the owners of the business. So, yeah. In Kenya?
Do they really enforce these
They do. So what usually happens is sometimes these stories will not necessarily get to the press, but the regulator is doing their job in terms of dealing with these cases of money laundering and fraud. And the reason being is it's your money that's being held and you need consumer protection. And that now is the reason why the regulator has to come in and clamp down and say, okay, fine, how do we deal with this issue? So whether it's fines, or maybe they might say, okay, what remedial measures can we take to fix this issue? But we'll put some measures to either you need to, freeze accounts or, do certain things. So if you notice, Binance had a case the other day in Kenya, and they froze accounts. I don't know if you remember, just a few weeks ago. Did you see that? They froze accounts. So it means they're actually working with the regulator to make sure that they're compliant. So the minute they spotted that, okay, somebody's trying to launder money through the platform, freeze those accounts immediately. And you take that suspicious activity report to the regulator and say that, okay, this happened, this is what we did, and this is the action that we've done. And the regulator sees that, okay, you actually have the tools and the policies in place to make sure that you're protecting your customers. Yeah. Sorry? Gentam? Yeah.
So I'm asking are there any tools is there a scenario where you can
Ask the head of Binance for Africa how he landed in a prison in Nigeria. I think that is. But typically, what happens is fines will be given to the company or to the owners themselves. Yeah. So, because of time, I'll go to the developer level, because I think this is important, because remember what I said, you have to look at compliance from a product level and from a architecture level. So where fintechs go wrong is because they're not designed. You have to design for chaos, because bad actors will always try and attack your platforms. So these are 6 hard truths that you always need to consider when you're building. The first is never store balance as a value. You must use an immutable ledger. It's an accounting practice but it's an audit log of all transactions that have been done on your platform. So you need to be able to see that these are the sum of transactions and no mutable fields. So you should not be able to change any information on your immutable ledger. It is your source of truth. Next is idempotency. I don't know if you've ever had an experience where you've tried to send somebody M-Pesa twice of the same amount because you're not sure if the first transaction went through, so you did it again. Have you experienced that? What happened when you did that? Huh? The second one fails. Sometimes it goes through. Have you ever had an experience where you run a card for a transaction, you're not sure if it went through, you run it again? Yeah.
It fails like the first time. If you try again, it still doesn't work, but then eventually you do receive.
That's independency. So you must have this within your systems. So each transaction has to carry a unique identity. So number one, to be able to flag to say that this is the same transaction this person is carrying out. So one transaction should be successful and the other one should fail. But you must have that audit log when you design for independency. And then remember, design for chaos. People will try to retry. Yeah. Webhooks when you're carrying out integration. So remember in the beginning, you're running you said you're the orchestrator. So you have to integrate with a PSP and all these different partners. And you must have webhooks that tells you when transactions are happening. And the webhook should also be designed to with error handling as well in case it fails. But your webhook is not your source of truth. It's just a signal. It's a notification to tell you that transactions are happening. Your source of truth is your immutable ledger. So it's very important that you design your webhooks with error handling, but that is not your source of truth when you need to do an audit on your platform. Next, fraud is a network problem. We've been talking about this pattern detection across users, not per transaction. So you must look at your users, look at their patterns, and that will tell you whether is this a fraud or is this some other issue. So you look at clusters, not the individual events. Number 5 is reconciliation. So when you're running a platform, there's several things you need to look at. There's the technology part, where money is able to move end to end. But then there's settlement, and then there's reconciliation. So let me give you an example. If I go and run my card at Carrefour, it looks like that payment is instant because you'll receive the message that your account has been debited. But on the back end, that no money has moved yet. What has happened is my bank via Visa has informed the merchant that we're going to credit you with, let's say, 5,000 shillings for that particular transaction. And we're going to debit from our side. Does this account holder have that 5,000 shillings? Yes, I do. And then it's going to go and provide the money to the merchant and the merchant's bank account. So when you're running a Web3 or whatever kind of platform it is, in case of any failure, so from your immutable ledger that you're storing on your technologies, on your platform, on your side, should be able to reconcile with settlement, which is how much money has moved between all your different wallets. And also what sits in your float as well. What's in your pooled funds? If these things do not balance daily, it means you have a big problem. So it's not optional. This is something that you need to build for to make sure that you can extract these balances and settle on a daily basis. And number 6, it's one thing to run things on staging, but it's another thing to run things on production. And you need to test for real life scenarios. So SIM swaps. People can do this. It's very popular. You need to be able to think about that. Latency, monitoring. So you must always design for chaos. So I'm going to show you examples of non-independent endpoints. How many developers do you have in the room? So without independency, this is what would happen. This is a transaction of 30,000 shillings. You'll see the currency. It's processed twice because I've run my card twice and I'm not sure whether the transaction has gone through or not. So I double tap on pay. The 2 requests hit simultaneously. Both pass validation. There's no key check. I, as the customer, get charged twice. So what's going to happen? I'm going to complain on your platform, and you have to issue me with a refund. And also there's a trust issue that's going to happen, because if this doesn't happen on normal platforms like M-Pesa, why should it happen on yours? Because people measure through comparison. Now, when you do design for independency, it will provide a unique key for each transaction, and it will be processed once. So the first request gets processed. You have the same key. It checks the servers. The original response is returned, and if it's the second transaction is not processed, and the user is only charged once. And you don't have to go through this. Questions? Have you ever thought about this in building? You have? Good. Why is it so dangerous? If you store a user's balance that can be edited, there's no audit trail because you delete the previous transactions, and there's no audit trail, you have a big problem. Why is that? Remember I mentioned staff members are also a source of supporting fraud. So if I can go and update somebody's balance, that's very dangerous. And there's no record of how that balance was changed. So today, I can say I have $1,000. I pay somebody internally. They change my balance to 10,000, and there's no audit trail. Who takes the loss? You can have issues of double spend because there's no traceability of all the transactions that have come through. If the central bank comes and asks for an audit trail, you cannot be able to produce one. And if you don't have an immutable ledger, because the bank is going to ask for your architecture, it's going to fail due diligence. So immutable ledgers, you always have a user ID type, the amount, and the reference. And the balances should either show a sum credit or a debit. So the rows can never be edited. Each transaction has a timestamp and a reference ID. The balance can be easily retrieved. And the central bank can call in and request for an audit trail. And obviously banks, this is what they want to see in your infrastructure. Any questions here? Right. So before you go to live, it's always good to have a friends and family testing. So this is where real money moves, and you're able to test live situations of the different scenarios. So first, you need to look at the happy path when you test during friends and family. You know, am I able to make a payment? Is the correct amount that's been received? And is the connection working? Then you have the independency test. Have a few of your friends make double transactions and see, have I only been charged once? And are the duplicate requests, you know, only one should be allowed and the other one should fail. Next is float reconciliation. So what you hold on your float, what you have on your immutable ledger, what you have as your cash out, all of these things have to match. You also need to look at failure of your webhooks. So how do they manage error handling? And what do you do when the webhooks are failing? So if it hangs, if it vanishes, it stops working, is the ledger still working? Your immutable ledger. Then you need to look at threshold testing. So make transactions that are just below the reporting threshold. And is your system able to flag it? And also velocity tests of what we've gone through. Can your system be able to tell patterns when somebody's trying to do smurfing or muling on your platform? Questions? Right, so before going live, here's a quick checklist of things to look at. So you have a compliance person, they're called MLRO. So even if it's just somebody part-time who can sort of assist to help, your KYC needs to be live, your webhook as well, some form of daily reconciliation. This doesn't need to be too hectic, just the ability to download CSV files and make sure that all your ledgers are balancing. All your beneficiary owners should be clear. Your float needs to be segregated. Your operating accounts and where your customer funds are being held. Independency, what we've just talked about. You need a documented process for suspicious activity. If you're doing B2B, you need to have a settlement hold. So how is money moving between your partners? And you need a pathway of how it is you're going to get to licensing with the regulator. Yes.
I need the pathway.
Am I the pathway? I'm the support to get to the to the pathway. So compliance is not a gate. Don't see it as something that's meant to stop you, but you need to design from it, from your foundation. We've gone through it you've seen it from a system architecture level to a product level. You have to think about that. So from how you design your partnerships to how you've architected your system, before you go live, you need to consider all of these elements. And yeah. Last questions? None at all? It was too hard. Mm-hmm. Which one? The slides, yes.
We should even have like, we are compliant here somewhere.
You know?
Right? Because you're such an easy target. So so thank you so much, Halima.
Mm-hmm.
Can we give her a hand stand? Yeah. Halima, please share your product link. Is it live or are you like what stage are you in right now?
So what I do is I do it based on a one-to-one, because it's one thing for you to receive an assessment, but you need to have a one-to-one session so you can actually understand what it is that you're being told. So whether you want to look at getting ready to make your application to a bank or to the regulator for your platform, or trying to understand how you need to design your platform to make sure that on a product and tech side, how to make sure that you're actually building for compliance. So it has to be a one-to-one session. Then you sign a sort of an NDA, and you're able to share your documentation, and then concierge service. Yes, you can just email me or give me a call, and yeah.
So Halima, we would be happy as Web3 Clubs to partner with you to help you scale your business. I feel like the one-on-one thing is nice.
Yeah.
But we can basically feed an LLM with all the information needed. So one point you just have a Halima on your website just talking and I feel like this thing can scale. Like
Yep, definitely we can have that that discussion.
Yeah. Yes.
Sorry, what is your office hours?
8 to 6 you can reach me, and Monday to Friday.
I'm sure she can make an exception if it's a crisis and the budget is right. I'm sure. Right? Yeah. Questions? All right.